You don't lie, Katie. Charts don't lie. So the overbought condition, in your view, is being rectified by a breakdown in bullish momentum. So you think what we saw last week, finally a little bit of a bounce back to where on the S&P, about 6,600 or so?
Well, since I was last on, it was a nice little round trip, right? We saw about 4+% downside and then recovered all of that with this bounce. But I'm not a believer in its sustainability. We are looking for more stabilization this month, but I think it's an interruption, not necessarily the end to this corrective phase. There's a lot of reasons to say it. New relative lows, perhaps, yeah. I mean, the next support is that 61.75 area, and I could see it getting worse than that even based on the momentum gauges that we track. The DeMark indicators, you know, those overbought, oversold metrics, are supporting about 4 weeks of stabilization, but that's about the only indication that I have that this could be, you know, a better month. We don't have oversold upturns. We don't have extremes that we like to see in breadth or sentiment leadership.
You don't always get those.
Yeah.
There's been times in the past where you were waiting for those and you didn't get them.
That's true. That's true. But we're not even where we were last April, which was, to me, just a swifter and kind of less severe market environment. I mean, when we look at these oil shocks that we've had, historically, it's not great for the market, and it actually has some duration to it. So I think we want to respect that.
So does that make you want to do a lot of work on oil?
And we do a lot of work on oil.
What's it telling you?
Yeah, so the breakout's real. I mean, the breakout actually happened to us before the war was initiated. So we feel like it's a pretty meaningful long-term turnaround. We've already had a spike, and even enough of a spike, I think, to impact markets and the economy. But I think it could get worse, and it doesn't mean immediately, but the next resistance above this kind of area that we've been testing recently is about 130. That's from the 2022 high.
And beyond that, WTI or Brent?
WTI. And beyond that, you're looking at 147. So these are peaks, and then you relate it to the S&P 500, and it's not great. So I think what I would just encourage people to think about is let's wait for weight of the evidence to suggest that there is a major low in place before getting more aggressively long. I don't think we should feel the need to chase these brief relief rallies.
There's a tendency to want to extrapolate what you're saying into what happens fundamentally with the war.
Yeah.
Right? Because it would seem like if there was a quick resolution, if the talks with that we're reporting this morning about a 45-day ceasefire and reopening the strait, it would seem like all bets are off for your...
Well, I would suggest that it could be prolonged. I think that is definitely a takeaway.
What could be prolonged?
The market environment, and therein perhaps also
if they reopen the strait, and if there's a ceasefire, I would think that you would...
I think...
That a lot of what you're talking about in terms of consolidation and downside, it might not work. What I'm saying is, if you're right, then this is not going to pan out.
Perhaps. So I think maybe it needs to be more than just reopening the strait to fix the market at this point, because we do have credit spreads having widened.
And what about the 10-year? Are you 4.5 now?
Well, about 4 3/4 is the next resistance.
You weren't looking for that at all.
It's been range bound, so these swings are really kind of hard to navigate. But overall, it's been more neutral.
I thought you thought below 4 was a possibility. No.
Well, there is support below 4, like around 393. But we saw a breakout above what was former resistance around 420, and that catalyzes a move higher towards that.
Does that say something about inflation to you?
I would think so. Yeah. But we try to think of it more just as technicians and say, okay, let's look at this in a vacuum.
I know.
And let it guide us.
But that's the weird thing, is that so many times the early signal about just about anything is in the technicals, and it's strange the way the fundamentals line up later with the technicals, even in these exogenous things that seem like they're completely impossible to predict because there's not enough smart money around.
Yeah.
The overall market itself is smarter than any of the smart money, isn't it?
I would agree with that. Price is really king here. And when we do see breakouts and breakdowns, breakouts like we saw in crude oil,
Yeah.
That's really meaningful, and it supports upside
All right,
follow-through. It's not really predictive per se, but it does relieve the chart of resistance.
Okay, Katie, what about Bitcoin? Bitcoin is still in a basing phase. Any moves up to 67,000 where we are today could be short-lived, and 59,000 is still a support. So we don't need you.
Well, oh gosh, I hope you.
Is that what you'd say? Did I get?
You know, it is a little bit boring right now for Bitcoin. I would say it's just sort of a short-term consolidation phase.
Is the support?
58 to 59 is support.
And we'll see that.
Oh yeah, I think that this is probably a basing phase that will be somewhat prolonged as well, with a series of retests.
Oh, yeah, we're going to see that.
Yeah, I think so. Yeah, I think so.
I told you.
You know, it's a cyclical downtrend, and that's the dominant feature on the chart right now. So we want to respect that until we see indications otherwise. And we don't really have an oversold uptrend there either. So I think we can assume that there's going to be retests of support, maybe even more than one, before we can fully get out of this.
Gold in a down.
For gold, I wish it was ready to go. But honestly, when you look at the DeMark indicators, it suggests that this is actually the beginning of perhaps even a long-term range for gold. So within that context, we'll be looking for signs of downside exhaustion.
What would the low on the
I looked at the
4,000?
200-day moving average for gold was about 12% below, and I wouldn't rule that out as this corrective phase ensues.
Below 4,000.
Or keeps hold.